20 trillion coming out of the Fed. That's what I think it's going to take to stabilize the system. And of course, every other central bank will be doing similar, proportionally similar. They obviously are different sizes, but so you are going to see, we put out 5 trillion. The Fed's balance sheet expanded by 5 trillion in 2020, 2021. This time we'll see 4 times that is what I'm estimating. This next inflation cycle that will follow the bus will blow away that. I mean, I think, and again, these are just seat of the pants guesstimates on my part, but I think by the end of this decade or early next, we could be looking at 25% inflation in the U.S.
David Hunter, a contrarian macro strategist with over 50 years of experience in financial markets, has made predictions that many might find shocking or even outlandish. He foresees significant upheavals in the equities and commodities markets, as well as the global economy, both in the short and long term. In the coming months, Hunter expects to see more troubling signs for the global economy, beginning with a cyclical recession that will be exacerbated by the massive leverage within the system. He warns of a global deflationary bust, accompanied by a financial crisis of unprecedented scale, something he believes should have occurred during the Great Financial Crisis, if not for central bank intervention. Hunter predicts that when this bust occurs, it will prompt another round of money printing, but on such a massive scale that it will trigger an immediate surge in inflation and commodity prices. He predicts that the U.S. Federal Reserve alone will print as much as $20 trillion in a very short time in a futile attempt to save the entire stock market from a systemic collapse. The Fed's actions will cause a ripple effect, as it would force other central banks to start printing excessively too, as they all try to save their respective economies. Hunter argues that this will lead to a commodity supercycle driven by investors flocking to tangible assets. Moreover, with the world severely underinvested in commodities, many popular metals are already experiencing significant yearly demand-supply deficits. This increased demand is likely to drive prices even higher. Hunter believes this global deflationary bust could begin as soon as early 2025. Sending the markets and central banks into a confused spin that could undo decades of economic buoyancy and send investors running toward precious metals like gold and silver. We will present clips from Hunter's latest interview with Palisades Gold Radio. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell for more videos like this. We appreciate the support and hope you enjoy the video.
The reason I'm calling for a bust, the bust refers to the economy and the financial system, and the bear refers to the market that accompanies that, the 80% down. So the Fed will react to both, but particularly the bust. But I think they'll react slowly because keep in mind, Powell has said for many years now that we're not going back to the policies of the last decade. We are not going to do, he's almost taught, I think he said, we don't want to do QE again. We're not going to see, and we're certainly not going to see the magnitude of QE that we saw in 2020 or, prior. So he doesn't want to go back to, ZIRP, zero interest rate policy. He doesn't want, what he doesn't realize, and that's a sign that he doesn't realize what I think is coming. If I'm right, this is the biggest, fastest downturn we've seen, in the post-World War II era. So bigger than 2007, 8, more, greater magnitude than 2007, 8, bigger, obviously, than 2020. So it's easy to talk about, well, we're not going to go back there. I guarantee you, if we are getting a free-falling system, and it will be weak economy, unemployment maybe to double digits in this country, but accompanied by major bank failures across the world. As I say, the U.S. got hit so hard in 2007, 8, or 2008, 9. We were kind of the big story of 2008, 9 in terms of banking crisis. I think next time it may be centered in Europe. It may be centered in Europe, Canada, Australia, and some of the places that didn't get hit as hard then will be hit, but we may not be the lead story this time. We meaning the U.S. banks, but it's going to be a worldwide free fall in the banking system, in the financial system. they're going to be slow to react because they won't see the magnitude of it initially, and they're going to and because it's going to require so much more than previous cycles. So it's funny that he's saying we're not going back there. The truth is, before this is over, they're going back there on steroids. I mean, it's going to be bigger than 2008-9 or the money that was required in 2020. Um, what what I think you could see is as much as 20 trillion coming out of the Fed. That's what I think it's going to take to stabilize the system. And of course, every other central bank will be doing similar, proportionally similar. They obviously are different sizes, but so you are going to see, we put out 5 trillion. The balance sheet, Fed's balance sheet expanded by 5 trillion in 2020, 2021. This time we'll see 4 times that is what I'm estimating. So, but to get there, if his mindset right now is we're not even going to see QE again, or we don't want to do QE again, and it's going to go to 4 times what we did then, he's not going to get there in a quick fashion, So he might say, well, reluctantly, I'm going to have to put a couple trillion in because things are blowing up or things don't look quite right. It's going to take him several efforts to get to a right size policy. Mm-hmm. It might be 2, the next time 4, the next time 8, but it's going to take a while before he stabilizes the system. So that's why people don't get it when they say, well, I don't see how your bust can happen, because it has been my forecast long before anybody else. I don't see how your bust can happen. The Fed will react and stop that. They won't allow that to happen. I said, I just laid out the reasons why they're not going to be quick enough to do that.
At the moment, Hunter believes we are at the beginning stages of a market melt-up, which he says will take stocks and precious metals prices even higher, especially when the Fed and other major central banks start cutting rates in September. According to the renowned analyst, the market's relief with the rate cuts will be so great and immediate that investors like Warren Buffett, who have built massive cash reserves, will return massively to the market and start buying everything in sight. Hunter adds that the resulting FOMO will put so much pressure on the markets that prices will skyrocket, moving the S&P from its current 4,450 points to 6,000 or 7,000. Hunter believes some of those massive gains will spill into precious metals, taking gold to a new all-time high of $3,000 and silver to $60 per ounce. But like all good things, the melt-up will not last long, the macro strategist adds. As the melt-up reaches more advanced stages in the coming months, Hunter says there will be more signs of the global economy, starting from the banking sector buckling under the pressure of all the unchecked money creation. According to Hunter, this will then lead to the bust, more money printing, further global decline, and an eventual collapse. Let's get back to the video.
With a lag, it's going to be huge. We are going to see an inflation cycle that will blow away the early 80s. I was there, and I started my career in 1973. So I saw the whole ramp up of inflation in the 70s and the early 80s. And what we just came through was nothing like that. I see statistics where people think we're close. This is nothing like what we saw then. This next inflation cycle that will follow the bust will blow away that. I mean, I think, and again, these are just seat of the pants guesstimates on my part, but I think by the end of this decade or early next, we could be looking at 25% inflation in the U.S. And it'll be worldwide inflation, so there'll be big numbers around the world. But just the U.S., I think we could be looking at 25% inflation. That means interest rates will be, upwards of 20%. Short rates will be upwards of 20%. And long rates certainly approaching 20%. On treasuries, never mind corporates. That tells you we're in for something we have never seen, and that's combine that with the fact that we have the kind of government debt we have. Just look at the U.S. We have whatever it is, 35 trillion in government debt, in treasury debt. and a lot more other liabilities. But ultimately, 320 trillion in global debt. In the U.S., to try to service our debt right now, we're struggling. It's already exceeded our military budget. It's eating up big chunks of our budget, and that's at 5% with basically 5% cost of service. If it goes to a cost of service that's well above 15%, how do you? I can't draw an equation that comes out with anything reasonable. I mean, and that's with the debt where it is today. When I'm talking about what I'm talking about in terms of a response to the bust, 20 trillion coming out of the Fed, that will probably be matched by 20 trillion out of the Treasury. Mm-hmm. So, in other words, they're going to be monetizing new debt to do the QE, and it'll be all kinds of programs. There'll be money handed out everywhere. We saw it in 2020. This will be that on steroids. They'll be doing everything they can, probably to keep pension funds from going bankrupt, to keep Social Security from going bankrupt, to keep there's going to be money coming out of everywhere and going everywhere, and so the Treasury debt will be double what it is now, probably, or close to it. I think global debt will be close to 500 trillion by the end of this, but by say 2026. So you're talking about something that's already way off the rails, going so far beyond this, and then soon having rates ramping up. Now, there's a lag. So the money they print into, and this is one reason why they'll be willing to do it, the money they'll be printing in 2025 will be into a deflationary downturn. So they're not going to be worried about inflation because they're staring them right in the face as deflation, in the form of banking system failure, et cetera, but actual deflation in terms of prices. The lag to that, to when it turns into inflation, is usually like 18 months. Lag to the economy is like 8 or 9 months or less, but the lag to inflation is usually about 18 months. It's not going to be immediate. You're not going to have inflation in 2026, or it's going to be very low. You'll be coming out of a deflationary environment, so it'll be coming from negative to slightly positive. By 27, it'll probably be moving to mid or high single digit, and then by 28, you're in double digits on your way. From there it just ramps.
Hunter predicts that stock prices will plummet by 80% at the peak of the bust, triggering a widespread market meltdown that will impact all assets, including gold and silver. He forecasts that gold, which he expects to peak at $3,000, will drop to around $2,000, while silver will fall from $60 to between $18 and $24. To avoid being swept up in the chaos, Hunter advises investors to resist their emotions and avoid getting caught up in the fear of missing out. He emphasizes that only two assets will likely perform well during the bust: U.S. Treasuries and the U.S. dollar. With central banks printing money at unprecedented levels, the Treasury Department will aggressively purchase assets from dealers, driving up demand and prices. However, after the bust, the outlook becomes much brighter for commodity and precious metals investors, as Hunter anticipates a dramatic surge in prices, offering significant opportunities for those who weather the storm. Hunter is predicting a commodity supercycle of epic proportions for precious metals like gold and silver, as well as key commodities like crude oil. However, this surge will only come after a complete financial reset, when central banks finally realize that pumping more money into the economy is like throwing fuel on a raging fire. We'd love to hear your thoughts on the macro strategist's predictions in the comments section below. Please share your comments, insights, and observations. Don't forget to subscribe to the channel, turn on post notifications, and hit the like button for more videos on gold, silver, and other precious metals. Thanks for watching.